Hey guys, so per usual, all information on this channel is for educational purposes only. Alright, so I've been on vacations, a lot happened, let's take a look. So first of all, someone on Bitcoin submarkets had said my system was complicated. So I'd say that's partly true. I'd also agree that simpler is usually better than more complex. But in the end, it doesn't matter what your system is as long as it makes money. So I'm just sharing with you guys what I'm considering when entering a trade and putting thousands of dollars on the line. Keep what you like, toss the rest. Build your tool belt. I try to be constantly aware of as many things as I can while mentally adjusting probabilities of trades based on things like confidence of indicator and past success with that indicator. So if you haven't watched the previous market update video, go and watch that. I'll link it in the annotations. Some of this might not make any sense if you haven't seen that. So real quick again to explain this, this is the futures premium indicator, and you'll see blue is quarterly premium fill, weekly is the green fill, and the line is China minus Bitfinex plus stamp. And you'll notice that whenever there's a negative China to West premium, we tend to go down in price and or stay sideways. So my hypothesis was on the last video that this will have to flip. Here's what the premium looked like 6:29 8 a.m. Eastern. You can see it flipped from negative to positive. Weekly was also positive. If we correlate that with the price, you can see this actually got you in a trade if you were trading based on this alone, which is super risky, but if you're trading based on the flip of the premium, it's kind of like a get ready, get set, go sort of situation. This says that, it's getting bullish, okay? We look at this volume contraction, we still haven't broken out, so taking a trade here doesn't really make much sense, I don't think. So the other things I was looking for, Kumo breakout, TK cross, vol confirmation, volume. So we had the volume confirmation here on this candle. Didn't get the TK cross yet, but we did eventually get all those things together with the premium flip. And then it actually looked way better in China. You can see we have Kumo entry, TK cross, Kumo breakout. And we broke this resistance, and now we're reaching for this 5K resistance, which is psychological resistance, as well as when we broke this triangle here and started this downtrend. If we check our friendly neighborhood Pitchfork, we can see still on the Pitchfork, we broke this Hagopian line I talked about on the previous video, showing that this is more of a bull flag than anything, I think. Suggesting the upside targets are this upper quartile line here, upper limit, and some like time points that you can follow, 9/11 and 11/28. I really highly doubt we blow through this all-time high zone. I think there's going to be a lot of people selling up here. So what I can see definitely happening is hitting this upper limit, bouncing back down to this quartile, and then testing again. Who knows what's going to happen with halving? It's good, in this ETF stuff, it's going to be completely insane. Now, if we throw a fib on that from the all-time high to the low, we have a perfect touch of the 618, which says that this is a respected Fibonacci retracement. So the next target would be this 764, which also happens to be this diag on the Pitchfork, so there's some confluence there. And then the ultimate immediate target, probably by the end of the year, would be this 1782, 1800, which is the fib extension. So again, if we're talking about fib extensions, if I take that same all-time high to low, and I fib this recent move, high to low, the fib extension matches the 764, which is about 6300. on the CNY chart. I'll talk more about fibs separately in another video. Next thing I want to look at is fractals. So if we look just how fractals can potentially play out, they're basically repeating patterns that people claim are just pareidolia, which is your eye trying to match patterns and make sense of randomness. But these patterns do work. That's why a lot of these chart patterns work in general. So fractals I see it as an extended chart pattern. So you can see we have this triangle. And I said, we had this triangle before, we had a breakout. We have this triangle now, we're either going to get a breakdown or a huge breakdown. We ended up with a huge break up to 3,200, which is right where this was predicted. And again, the time course wasn't exact. You can't trade based on this alone, but at least you have some targets in your head. Okay. So if we use that same concept with these two triangles, and I say we moved up 800% from here to here, our ultimate target for this entire move would be about 3,800 USD, maybe. We'll see. Next thing I want to look at is the hourly. You can see we cleanly broke the 618. We broke this huge resistance support zone pretty cleanly here. And if we toss on the cloud, you can see this diag is confirmed with the uptrend on the Kijun, and a touch of this Kijun and a bounce would be confirmation of continuation, obviously. It would also be a bounce around the 618, so it would show that the previous resistance is now support again. So just like keeping the higher time frames in the back of your head, do you want to keep fundamentals in the back of your head? So we have things like Brexit still unraveling for the next 2 years. This creates uncertainty in global financial markets and shifts money to safe havens like gold and Bitcoin. Couple this with worldwide zero interest rate policies and negative interest rate policies, and there's no incentive to park your money in savings. So we also have negative returns on 50-year bonds in certain countries, which doesn't really make sense to me. I mean, I can't even fathom how that happens. It begins to break down like that. So if we take all that into context and add onto that Bitcoin halving, which happens in a few days, around July 10th, so about a week, the halving will cut daily supply of Bitcoin in half. So this is considered a type of supply shock. It isn't exactly a surprise, it's scheduled, but the basic supply-demand curve would state that if demand remains the same or increases, and supply decreases, price should increase. So if we look at this seemingly complicated supply-demand curve, you can see we have our demand and our price. So if we start at our supply, if we start at the first point and move to the second point, we can see how we end up with increased price based on decreased supply and aggregate demand. Excuse me. So if supply decreases, so which supply shock would be an example of that, and demand increases, and specifically for Bitcoin with increased usage, adoption, acceptance, this Winklevi ETF that's coming, etc., which would create excess demand, price should drastically increase. So the bottom line here is you're more likely to make money long than short, so be careful shorting this. Happy trading.